It's that time of year again. Property tax bills are out and mortgage servicers are starting to make those payments for those of you guys that are escrowed. I'm Stephanie Johnston here with the Johnston team at Service First Mortgage, and we are going to talk today about what you need to do to be prepared to save the most money in property taxes and then adjust for anything that may be an increase or decrease and why it happened this year. What was the big change in 2023 for property taxes? First off, tax bills. Specifically, I'm going to talk about Texas. So we do lend in lots of different states, but Texas had a lot of change this year, so I want to focus on that as the example. Most counties in most states do follow a lot of the same premises. If you have questions specifically to a tax bill that's not in Texas or some extra questions, of course, reach out. So here in Texas, our tax bills run from January to December, and there's 3 key points that make that tax bill give us a final number for the bill amount. And those are going to be the tax value, so what the county says your house is worth, the tax rate, and then exemptions. What we've seen over the last couple of years is values have gone up. Unfortunately, the counties have also raised our tax value, so that's not great news. So we always want to pay attention to what that is. Those notices come out in May. You do have a protest period that we talked about earlier in the year, 30 days from that to protest the value, and you'll get another chance to do that next year. The next milestone would be in October when we actually see those bills come out and tax rates published. Good news with values going up and then counties also having more of a tax base. Meaning that if your county or whatever city, ISD, whichever entity we're talking about has an increased tax base and they don't need the extra funds, they can get a lower rate on what they collect, meaning maybe more houses were built, or again, values on the houses in the county already or city or ISD were increased. They adjust the rates each year. So over the last couple of years, we've actually seen tax rates drop, which is great, helping us lower that tax bill. We did find that very true for 2023 for most all entities. So the city and the county, ISD, all these, a lot of areas had lower tax rates. So great news. So those of you guys who've been in your home a little bit, that could have been something that I see a lower tax bill and maybe you weren't expecting, or maybe it stayed the same even though values went up. If we just closed your home loan, we might even see a lower than expected tax bill because we were using last year's tax rates when we did close you. So good news there. The other great news is in the state of Texas, the homestead discount was increased for 2023 going forward. A homestead discount is a discount that you get when you own or occupy a home. So if you are living in your home, make sure that you have filed that at some point. You only have to file it once, but you do have to file it when you take ownership. For any reason, if you don't have this on your home and you've owned your home even a couple years, one, call the county to get it filed ASAP for this year and you can get it corrected. You can also go back a couple of years for most areas and adding it on and getting a refund from prior year's taxes. So even though you didn't do it, again, go add it now. So specifically in what we saw happen is we had the homestead discount raised from a guaranteed $40,000 deduction to $100,000. So what that means is in the state of Texas, our school taxes have a value deduction by that number at minimum. So some counties or cities or ISDs might give you additional discount for a homestead exemption, but the required minimum through the state of Texas was $40,000 last year. That was increased to $100,000 for 2023. So in a real life example, if the county said your house is taxed at $300, last year you would have paid for school taxes on $260. Now you're only going to pay them on $200. So we're going to see that also help property tax bills have a deduction and have a lower tax rate for this year. So a good thing to maybe see those tax bills balance out or possibly decrease. We will take that. The other piece on this, now that we've kind of seen, okay, these are some great savings, is now what happens when your tax bill is different than what we were expecting it to be. And these are called escrow shortages or overages. premise on here, because there's a lot of frustration generally on escrow accounts, which are what we collect and pay taxes. And I think some of that comes up to the premise of we're collecting on something that a lot of the time we don't know what's going to be. So as we just said, even if we closed your loan 6 months ago, we're guessing to our best ability that tax bill, and then it comes out and we pay it. So remember that mortgage servicing departments do not get your value notices in May. They don't know if there's any change to exemptions or anything like that. They don't know anything until they get that tax bill in October. So if you're ever in a situation that early in the year you get a value increase or decrease, you're gonna add or take off exemptions, and you have any questions on what to do, always a best practice to raise your hand sooner. Reach out to us and let me help you determine if you should take action on your escrow account when you know that, again, not later. Now that the bill is out, what will happen? Servicers start paying the bill December 1st going forward. So they'll go pay the tax bill. Then mortgage departments generally in January and February start doing what's called an escrow analysis. And that will determine if there's enough or not enough money in that escrow account. And if there's not enough money, you'll get a notice saying you can spread that out over a period of time or write a check to make up the difference. If you're in that situation, happy to help navigate. So of course, give us a call. If you actually are in the opposite and you have too much money, then it's an escrow overage. They'll mail you a check and drop your mortgage payment. Now, if you possibly are in one of these groups that you think you have a big change, you can call servicing and most any of the servicers and say, I would like you to do an escrow analysis now to figure out what this is, to try to take action on this sooner, and they'll go forward with that. So as soon as you see that tax bill, give them a call and ask them to take care of that process. What I want to make sure, again, kind of takeaways here. A, you have every exemption that you are rightfully owned to have on your property. So the homestead discount, over 65, and VA discounts, things of that nature. You can make sure that's on there on the tax bill you received. Or if you Google your county name in CAD or Central Appraisal District, you can look up your property online. Second piece is kind of looking through to see if you're going to have any change with these homestead and lowered property rates. Are your tax bills going to be higher or lower? And then if you have any questions with the bills being increased or decreased, how is this going to affect payment? We know it's confusing, so please reach out if we can be any assistance for there. Hopefully it was helpful. Just want to provide awareness of this. Always here to help if you have any questions, need anything in a real estate world, mortgage, finance, or just general questions as well of anything we can help out with. Hope your day's great. And again, Stephanie here over at Service First Mortgage. Thank you.